Hello and welcome everyone to the Valentine's Day edition of the Wall Street Blockchain Alliance for Friday, February 14th, 2025. Ron Quaranta here with my co-hosts David Brill and Josh Klayman. Before we begin, our usual disclaimers. Obviously, nothing we're discussing is investment or legal advice. And obviously, everything that David or Josh or I are discussing are our own personal opinions and not necessarily the opinions of our firms. David, Josh, yet another busy week as we plow through the early part of 2025. Happy Valentine's Day. David, Josh, what is going on?
Go ahead, Josh. Wow. You've been the world traveler.
Well, as I was telling you guys in the beginning, before we went live, I've been eating myself into oblivion with chocolate. So that's going on. But I would say, I mean, from my perspective, just more exciting steps continue to occur in our crypto space. But what about you, David Brill and Ron?
I want to point out one thing, David, for the audience. When Josh travels on the private jet, it's not like Hershey bars that are laying around. So these are like the high-end chocolates on the Gulf Stream. David, go ahead, buddy.
No, I am just really happy to be back in Florida, and I'm heading to University of Miami Law School's having an event today. So after our podcast, I'm heading down there. But happy to be in the sun. My daughter's on winter break, so we're going to get some quality time together. So after today, I'll take a little mini vacation in Florida and some quality family time.
David, Josh, let's dive into it. There's a lot to cover. Josh, I want to start with you if we could. And my phone continues to buzz and my Slack messages keep blowing up. I wanted to talk a little bit about the position changes we're seeing from the Securities and Exchange Commission. We've certainly seen the rise of the crypto task force. We're hoping to meet with them during our trip to DC, which we'll talk about. The big item that really popped up, Josh, was the petition of the court, which I think was approved by SEC and Binance to pause their case. Can you tell us a little bit about that? And were you surprised by that sort of dual petition?
So, I mean, I may not be best positioned to go through the details of it, but I would say I think it's consistent with the idea that we're seeing in other cases, right? It's the SEC with that has brought suit against certain trading platforms. And we saw in the Coinbase case, right, that the Judge Fela has offered or granted leave for the interlocutory appeal to address some key issues. And these are issues of federal law, notwithstanding that it's a different circuit. Right. Like the application of the Howey test and the securities laws to digital assets, this is a big issue. And I think also, as we predicted, in the past, with the new administration and the new appointments, even the acting appointments for heads of regulators, we're seeing some major changes. So I think I saw John Reed Stark, for example, post on LinkedIn about the death of the crypto asset and cyber unit. And now it's just called something like the Cyber and Technology Unit. Right. So I think there's a lot going on there. But what do you think, David? What are your views about that?
I really think things are starting to play out how we talked about it in the fall, before the election. I think the commission's taking a pause, and they've said pretty much as much, that they're taking a pause on some of these cases, and they're going to formulate their own policy and then move forward. So I wasn't surprised by that at all. I like the idea that the commissioners themselves need to approve any, new cases or new litigation being brought. So I think these are all positive steps, and we've seen some folks be reassigned. I don't know if it was the deputy head of, not investigations, but sort of, I call it prosecutions, but the deputy head of enforcement.
Yeah.
I believe one person left or one person was reassigned. And so I think is a clear sign that really the pivot is going to go back to regulation and not so be focused on enforcement. And I think regardless of what time period we're in, the SEC is a regulatory body. Yes, we should absolutely be prosecuting for fraud, for insider trading, for those things that violate our laws. But in general, I mean, it is there to really promulgate the rules, to bring the securities markets and then tangentially our markets forward. So I think what's going on is consistent. And I'd like to say our collective crystal balls, we're calling it pretty well on them.
Yeah, and may I just jump in about one other thing?
Sure.
So I think one of the interesting things about this stay is that the SEC evidently proposed it to Binance, right? And that Mark Uyeda, the acting chair of the SEC, was quoted as saying, the work of the task force may impact and facilitate the potential resolution of this case.
Right.
So I think that when we think back to what Hester Peirce said in the Journey Begins, right, with those 10 points relating to the crypto task force, some of which included things like prospective and retrospective potential relief in relation to tokens that were issued pursuant to ICOs and things like that. Wow, I'm really inarticulate today. I think I need more of the
David, Josh, thank you both. And for everyone in the audience, again, thank you so much for joining us. If you've got questions for David or Josh or I, please feel free to put them in the chat. We'll definitely address them. David, Josh, good points. And we've been covering this and monitoring this for some time. As we see these developments, one of the things that caught my eye, and David, you referenced this, fraud cases obviously should be pursued within the enforcement authority of any regulator. One of the articles I had seen really was the commentary by SEC Commissioner that noted, well, meme coins may not necessarily fall under the purview of the SEC. So that raises a couple of issues, right? Because you and I have talked about the meme coin market quite a bit, and we understand the legal logic of that and the logic that Congress needs to act on some of these things, and we're seeing that, and we'll talk about that. But are you concerned by some of that activity, David?
Look, I've always taken a view of this sort of, you have to buy things with your eyes wide open. And if somebody is selling you something and they're telling you it doesn't have utility and it's a picture of something, funny or interesting, look, you have to draw your own conclusions on what the value is. And I don't think we have to be, sort of like paternalistic in the sense of having the state sort of guide us through every choice we make in life.
Sure.
I do think these are inherently risky. I do think we will see an evolution of meme tokens into, whether it be, and we see a little in Europe with like sporting clubs, and they're sort of creating these societies, and there is real utility with them. But look, if people want to buy them, it's certainly their prerogative. But I don't know that they should be looking to the commission or to the judiciary if they want insurance on their purchase if it goes against them.
David, I want to tear up the script just a little bit on that, or go off script. So we talked about this a bit earlier, but you've mentioned the phrase social tokens, and I think that's what you're kind of alluding to. And for the audience's sake, I'd love to really dive into that for a moment, if we could. Are you speaking about things like loyalty tokens, for example, or loyalty rewards? Are you talking about other things beyond that?
I mean, I really see a world where media stars and other well-known people create communities around their tokens and their tangible things that you get. So, for instance, I'm a big music fan. If the Rolling Stones or U2 had loyalty tokens, and it meant that you could get certain tickets first or certain memorabilia first or get in-person events, those tokens would have value to those fans. And I could see why people would want to accumulate them, and they may go up in value. Yeah. And I think to all of us, whether you like rock and roll music or not, those are tangible things that you would get from them. And I think, and I can see that in the sporting world, and I can see that in the media world. So I do think it can evolve to that in communities and getting better benefits for owning the token. So yes, I do see an evolution that's possible.
Josh, please weigh in here. And David, I know you and I have talked about that, and we agree from what I'll call a use case perspective. I'm with you 100%. Josh, how much of that runs into securities law?
I mean, I think that's an open question.
That is the question. But I mean, it goes to the point, right, Josh? The things that need to evolve from a regulatory framework perspective, the things that need to evolve, from a legislative perspective. Is that an easy lift in your mind?
I mean, I think the legislative perspective is always tough, right? Because we have to have Congress agree to things. But I think we're at a better regulatory perspective than we've been in quite some time, and possibly ever when it comes to crypto. We certainly have seen from the CFTC, we've seen the announcements of upcoming roundtables, some of which will involve digital assets, right? Public roundtables. We've also seen this launch coming up of the CEO forum that will also announce the launch of basically a pilot program for non-cash collateral, including stable coins. Lots of developments there. We have the task force at the SEC, including not just what I mentioned about the prospective relief, but I think a lot of people are focused on how you would, I don't know, how you would make more bespoke documents, right? That would actually help you in the event that you wanted to have a registered or other type of offering for express securities. So, I mean, how heavy of a lift is it? Less heavy than it was a few months ago.
Josh, it's a really fair point. And, Josh, David, in the new year, everyone's been singing in crypto, happy days are here again, or will come. And everyone's got these, euphoric sort of, we've got an administration and a regulatory regime that will at least help evolve the market. This is a good thing. David, Ethereum's down almost 20% on the year. Bitcoin is tracking a channel that is just ridiculous in my mind. What is going on? Let's shift to the markets and try to understand, you've mentioned the meme coin markets kind of really being battered. What is happening, and why is the market perceiving all of the good things that the three of us are talking about as sell-off time?
Well, the first thing I want to say is it's so interesting. Now, we have somebody favorable to crypto as the CFTC chair, potentially, the SEC chair, a favorable person to crypto in the OCC, in the Treasury Department. And we even had, the Fed chair sort of walking back a little bit. Why are crypto companies being debanked? Something that, the three of us and a certain select group of people knew was going on and just couldn't talk about. So I think we have to remember, like, if you had said 2 years ago this would be the case, we'd all be like, that's a very hopium optimistic view. And so now this is sitting in front of us. So we shouldn't lose the forest through the trees, or vice versa. But my point being is we're in a really good place, and I think we'll see that momentum. Now, with the tokens themselves, it's been very interesting. I mean, we've seen a lot of interest in buying in Bitcoin. But look, there are sellers that are matching up with the buyers. So if you think about it, people are buying through ETFs or otherwise more than what's being mined. But, there's been a lot of chatter on X, and one of the chatter is that, Binance had the $4.8 billion settlement with with DOJ, and they needed to fund that settlement. And there's been chatter on X that they've been selling some of their own token holdings to fund that, fund paying that fine. Now, it's not clear. I mean, we can see the holdings have moved. It's not clear it's for that purpose, but I think you can logically get there. And so if that's the case, that's a very motivated seller selling against these, the demand. I think we have this view like everything is going to go up like an ICO boom. And I think there's like 1 million tokens now, or probably even more, from Pump Fund every day. So I think it's a little unrealistic to have this like everything go up and up to the right. But I think what you're seeing is that there's aggressive shorting of Ethereum. And when Ethereum goes down, it's very difficult to see the altcoins and the meme coins go up.
And so why do you think that is? What is this aggressive shorting of ETH about?
It's a really good question. I'm really not sure why. I mean, I think that the ETFs, not including staking, isn't helpful. So maybe there's some mechanism where they're shorting the ETFs but are long staking Ethereum, and they're getting arbitrage from that. This is my speculation, but I think what we're seeing is like a well-known hedge funds who are shorting Ethereum. And I think what you're going to see to counteract that is more people are buying the Ethereum ETF, and in several weeks it surpassed the Bitcoin ETFs. And again, the same old song is that once the wirehouses finally turn their clients on board, and we're into month 13 of waiting for them to do that, a lot more, people have access to those ETFs on those platforms. So I think those are kind of the counterbalancing.
Josh,
issue.
can I wait?
And
Josh, can I wait?
one other thing, if
Yeah,
I
go
can.
for it. Sorry, David.
The other thing is the tariffs. Every time a tariff is announced, the crypto market sells off. So regardless of what our personal views are on tariffs, the crypto market, feels that those are risk-off activities. And then every time it seems one is announced, like all the algorithms kick in and crypto sells off.
Josh, if I could weigh in, I'm not going to necessarily disagree with David. I wouldn't dare do that. I will add a couple of things to that that I think offset a little bit of what he's talking about. When you look at the Ethereum sell-off, and again, just reiterating for everyone in the audience, none of this is token advice, obviously. But I think there are two trends, David, and I'm pulling away from the market technical analysis of it, and I'm pulling away from the hedge fund kind of flows about it.
Mm.
What I'm looking at are the product and technicals of it. There's an ongoing governance conversation vis-a-vis Ethereum that I think is important. There are also real concerns from a product use fit perspective. A lot of the institutional engagement is now building on Solana. And again, this is not a Solana pitch or a Sol token pitch necessarily, but I have conversations with folks on a technology and enterprise level that talk about throughput is there, capacity is there. Yes, they've had some outages. That doesn't make them necessarily a good fit for many institutional engagements, but the arc of Ethereum being the L1 to build on top of seems to be shifting away a little bit. And again, I think that's on top of, David, the things you're talking about. So does that change with, can ETFs enable staking as part of spot ETH? That might be a game changer and a catalyst. I don't know, but I think there is really a fundamental technology battle that's happening vis-a-vis Ethereum and Sol, for Solana, for example. So I think that's part of it. And I think you see that in the disconnect between the price motion of BTC and ETH. Right. I think there was a long time, David, where BTC and ETH sort of moved in tandem. There were gaps in the chart, but now we're seeing true divergence in my mind on some of the price points.
Yeah, look, I mean, it used to be at one time that ETH was always trading around 1/10 of what Bitcoin was trading.
Right.
I think we're below 0.03 right now. I haven't done the math, but I think that may be the case. And so, look, I do think that there are other technologies that are, moving forward. But ETH is still the preferred, currency for staking and DeFi, more DeFi, I should say, but staking as well. And look, this world was never going to be Bitcoin, Ethereum, and everything else. There was going to be over time other blockchains that would serve purposes. And I think Solana is, really strong in a lot of ways. And you're seeing these massive trading volumes on, meme coins on Solana, which regardless of how you feel about meme coins, and I'm in no way bashing them.
No.
It's a good use case to show how much demand that they can handle. But even with that, Ron, like when I've dabbled in the meme coins just to sort of see pressure test some of these things, they still have issues too. Like the gas fees may not be as high, but you have to try doing your transaction several times before they go through when it's in sort of the higher time, the high usage. So I do think they're going to be more, and I do think Solana is a really, meaningful competitor. But I do sort of think Ethereum shouldn't be where it is right now, and I think it's market forces more than usage forces. That's my take.
I'm not negating that. Just one last thing real quickly, Josh, I'm with you. But it is telling. Who would have imagined 4 or 5 years ago, the three of us talking about, and I think it was this past week, JP Morgan came out with a report saying that Ethereum would be under significant competitive pressure by other platforms as well. So David, I fully take your point. It'll be interesting to see how it rolls out. Josh, go ahead.
Oh, I was just going to say, I know we've been talking about Solana for meme coins and things like that, but we've also seen a lot of announcements, including some from just yesterday, about tokenization happening on Solana. So I think yesterday, Franklin Templeton announced the launch of the tokenized money market fund. We previously had seen other announcements, including about Securitize and Solana partnering for real world asset tokenization. Securitize and Apollo bringing a $1.3 billion tokenized credit fund to Solana with wormhole integration, other things so I think that's another big thing is tokenization. And certainly it's not just limited to one chain, but definitely have seen a lot of announcements relating to Solana.
You're absolutely right, Josh, and it is definitely a part of the tokenization working group conversation and the Slack channels and the text messages on a regular basis. But David, Josh, it also shows us how easy it is to go from talking about market prices for particular tokens vis-a-vis the use cases associated with them, and David, to pump.fun, where the prices have no engagement or no relevance to. So again, I don't want to make this a public service announcement particularly, but David, you've said we've all said buyer beware many times. Know what you're buying, I think, is a critical part of the conversation. David, Josh, I do want to pivot to the macro if we could, if you'll both indulge me. I'm sort of sick and tired of being up waiting in front of my screen television for the latest 8:30 news. I'm up anyway, but I suddenly drop everything to see what the latest economic data is. Inflation came in hot, David. PPI, I think, was on Wednesday. I'm probably mangling the numbers, so for everyone in the audience, please double check me. I think the consensus was 3.3%. It came in at 3.6 or 3.7. Commensurate with that, this morning, sales, consumer spending was down notably beyond estimates. I think there are seasonal factors there. But look, David, the macro picture is still a little fuzzy now. And that means everyone's screaming, what will the Fed do? I don't think it helps that we have the president saying, cut interest rates, because I don't think we're in the position to do that. Certainly the Fed knows better than we do. But David, macro affects crypto, which is not the story you and I were telling 10 years ago. What are we looking at for the next quarter?
Honestly, I think where we are now is exactly what we've been saying on this podcast for the last 6 months. The numbers are now where we thought they were, and we didn't think we should have had a cut in the fourth quarter, and we likely shouldn't have. And I think, I don't want to play conspiracy theorist, but I do think that the numbers were being massaged this past 12 months. And now we're seeing exactly where the numbers are, where we thought they were, and so in some ways, I really think that these numbers are exactly where we should be. It just happens to be that these numbers aren't where we want to be in terms of having lower interest rates on the 10-year and, being in a risk-on market. So I think that's really, I'm sure you're not surprised, Ron, and I think Josh has heard us talking month after month, and either she's not surprised or she's just tired of hearing us talking.
Which is a legitimate possibility.
I agree.
You guys, and I realize you may say okay, above my pay grade.
No,
but
no.
But I mean, I'm just curious. Do you have any ideas about what should be done?
I mean,
yeah. Go ahead,
look, so what should be done is based on the data, and David and you and I have talked about this fact that the data it's not the data, it's the revisions. And because the Fed has to look backwards on data, that data gets revised, and sometimes that means the actions they may or may not take aren't necessarily driving things in the right direction. David, you alluded to inflation was extraordinarily high. Interest rates were, the Fed raised interest rates. And then in a sort of a panic sometime last year, cut interest rates 50 basis points. I don't think they needed to do that. I'm not an economist, but I don't think they needed to do that. And then they followed that with another 25 basis point interest rate cut. And again, I think looking at the data, they're now stuck in a holding pattern. And the holding pattern, which people bet against, David, is will there be one interest rate cut? Will there be two interest rate cuts? They don't know the answer to that. And they can't say they don't know the answer to that until they see some of the data. What will consumers be doing? Will tariffs, David, to your point, the Fed's not in a politicized body per se. Tariffs will affect who's buying gas, who's buying eggs, who's importing, who's exporting. And they can only respond to that. And it's hard when a tariff is thrown out there on a Monday and then taken down on Monday night. So I'm getting on a little bit of a soapbox, Josh, because I don't envy the Fed their job. But it means everyone else's work is harder trying to figure out where they're going.
Yeah.
How do we get out of this holding pattern? Sorry.
No, I was just going to say, look, I think using tariffs as a way to invite certain behaviors, I support that. It's a business person to using different levers to their advantage. The question is, when they're actually enacted and enforced, what is that going to mean for costs for people? And I think that's really that's the way I like to focus on it, and I would encourage people to think about it in general because, look, I think it's clear that our administration wants certain of our partners to do certain things. And if saying that using tariffs is a way of getting those things to happen, then I support that.
Josh,
I think the question is, when some of them are actually implemented, what does it mean for the bottom line and what does it mean for the economy?
Josh, if I could, David, I'm with you, but it's very clear that tariffs are a negotiating tool and not a policy tool, just given how quickly they're invoked and then rescinded. And I understand the business person's perspective on that, but that generates uncertainty, and there is no market, and you and I know this, that likes uncertainty. And when we break out of that pattern, Josh, I have absolutely no idea, and I feel like you're trying to bait me into wagering with David, and I will not do it.
Oh, no. I'm still waiting for the steak.
Yes, we will. I'm going to throw this out there for everyone in the audience. I get weekly menus from David. I get photos from his. David is a gourmand when it comes to the steak world. He's sending me pictures of steak houses he's eaten in. I get it. We will definitely get it scheduled. Yes.
Oh, it's all in good fun, Ron. I will say this. I was very fortunate to go with several of my very good friends to the new steak place opened by Daniel Boulud, and it was really outstanding. And so in the spirit of our bet, and I just needed to send Ron a picture, really great prime rib and, before being devoured. So,
I'm jealous.
Fair is fair, Ron.
Fair is fair. But that being said, when your spouse is a vegetarian and she sees me looking at steak pictures, it's a very interesting conversation. I want to thank you for that.
Well, could be worse, Ron.
Just keep sending steak and desserts. That's fine. I need nothing else.
Yeah, it's a text message, but no, we will schedule that soon, and then we'll have some documentary evidence.
We will definitely have photos.
But I do want to say one other thing is that I think credit delinquencies are at a 5-year high, and they would happen if you were eating at that restaurant all the time. But all joking aside, we're still seeing this bifurcated, lower to middle income consumer who's really kind of suffering, and then the higher end consumer who's able to use their salary and assets and are benefiting from this sort of asset inflation. So we are still in this sort of two-tiered path, and we do need a way to sort of figure this out a little bit.
Yeah. By the way, hopping back to Binance for a second.
Yes.
Just for a second. One thing that came to mind after we were talking about it is, it's really astounding at this point. Well, it isn't astounding given what we've seen and what we've predicted. But if we go back in time to when we were first talking about the SEC's case against Binance, I remember us specifically comparing it to the complaints against other trading platforms and saying like, oh, this one looks kind of boring like a documentary, and the Binance one looks scintillating like a thriller, right? With all these sort of, really kind of wild allegations. And so I think just, going back to this idea of the 60-day stay, I mean, that is that much more powerful when you think about the nature of the allegations that initially were brought.
Josh, I've been meaning to ask you, when you look at the changes you're referencing and the allegations and how now regulators are looking at them and the work happening in DC, and full disclosure, David, Josh, you and I and several WSBA members will be traipsing through Washington later in March for some visits. We're not lobbyists, but obviously we want to be part of the dialogue as voice of industry across all of our members. Josh, have you seen, no names needed, but your clients change how they're positioned or what they're focusing on given some of these changes?
Very much so. Yes.
Can you talk a little bit about it?
Well, I mean, it really varies widely, right? Because there's lots of different kinds of clients and lots of different kinds of products and services that they might offer, or capital markets offerings, things like that as well. But even when it comes down to things like policies and how conservative or overly conservative to be, which you guys know I'm a conservative lawyer, right? Generally speaking. I think a lot of people are really taking a look and saying, do we need to draw the line where we drew the line before? In terms of being overly cautious out of fear that the SEC would think every single digital asset transaction involved a securities transaction. So I think there is definitely a change of stance about that. Certainly, others are moving forward on projects, as we've talked about, where there may have been a big pause or there may have been greater reticence in the past. And we've seen lots of announcements in the press now of all kinds of different sizes of entities in different locations where they may be launching stable coins or various other things. So I think, yes, there's been a ton of movement. And also, it's not exactly related, and yet it is. I've seen a lot of movement in terms of digital financial market infrastructure and shared ledger ideas moving forward that have been paused for a very long time.
Yeah.
What about you guys? What are you seeing?
I'll share with you, Josh, David, following up on that. I have conversations with colleagues in Singapore, certainly in Europe. There, one of the conversations was talking about the new administration and new approach to crypto. But the universal response is, once that clarity is there, we want to do business. We're opening offices there. And the feedback is what we've been talking about, because that's the biggest market. And I've had a colleague in London saying this for years: if the United States got its act together, paraphrasing, this is going to be a very big industry. And he still believes that. David, I mean, you're probably hearing similar conversations.
Yeah. So, at FTI, we have a global practice, and we're really seeing that folks in the Middle East,
Yes,
in other jurisdictions outside the US are really creating robust products and working with the governments to sort of in the UAE and Dubai, really, creating the infrastructure to do these projects and being part of that process. I think the biggest thing that we're seeing in the US is, I was advising clients before on ways to make passive investments in the US, but do in such a way so that there was a blocker between what was done in the US and the parent entity. Whereas now that's not as much of a focus, and it's more a focus of, what are the valuations and how do we deploy capital that we have in the US, and what ways do we go about it? But I still think there's going to be a little bit of a lag until Chairman Atkins gets confirmed. I think that's important. But I do see companies really wanting to deploy capital here, as well as, market their products here and have more of a footprint here now that, there's been a seed change in how our regulators are looking at crypto.
A question for you guys. One thing that I think has caught the attention of many clients and others are the statements by Eric Trump about potential different capital gains treatment for U.S. projects that issue tokens or that launch tokens and the related tokens versus non-U.S. launches. And this has actually begun to animate some decision making about whether folks launch from outside the U.S. or not. Now, even though they're just statements by Eric Trump for a proposal of treatment, of differential treatment with respect to capital gains, what do you guys think?
I will. I think we're all a little limited on some of the things we can talk about, but in general, I would say any conversation about significant capital gains tax changes, there will be representatives on both sides of the aisle who will die on that hill, and that will be a long, hard battle. And just to stitch that up a little bit, I think the administration is talking about something along the lines of $4 trillion in tax cuts, which that would be arguably a part of. That's no small feat. I'm all happy about tax cuts, but from a pure economist perspective, you got to figure out how they're going to be paid for. And I heard this on the news. Shout out to Bloomberg. David, it'd be interested in your perspectives on this as well. The true concern now percolating about the debt and deficit. The deficit's something like 7% of GDP, which is double, maybe double. I'm probably screwing that number up. Significantly higher than the average. So it's starting to become. Government's not paying its debts and just pushing it all forward. That's going to have a drag. David, tell me if you disagree.
Yeah. Wow. I could spend 3 hours talking on all those topics. But where to start? Okay, I guess first on taxation. I I think taxation needs to be totally revisited. I don't think crypto should be treated as a property. We need a different designation so that it can be used in the form that it was imagined. So, a de minimis exception, the ability to use it to buy coffee or buy other things and not have to keep track of basis, that needs to change. I think fundamentally, most everyone agrees to that. I think who's in the space. As far as favorable taxing from U.S. crypto versus overseas crypto, I mean, I don't know the viability of that. I mean, I understand, in a sort of America first environment, why that could be attractive. I'm not sure the viability of that or the legality of that, but I'm sure people have been thinking about that more, can think about it, and we'll see. But I will say this: anything that gives us more favorable tax treatment of crypto is something I want to hear. Definitely listen to and have my ears open.
David, Josh,
for.
can I add one thing to that? The additional complexity of that is the Department of Governmental Efficiency is now at the IRS. And candidly, politics aside, the IRS is having its own series of problems between outdated systems, staff either departing. So there's a lot of work to do. Whatever your political affiliation is, there's just a lot of work to get some of this done.
Look, I will say this, and you were talking about
Yeah.
deficits, and it's a problem. So one of the reasons why we want to see lower interest rates is that we can refinance our debt at lower interest rates. And so I think in the past, we've missed the opportunity to do long dated debt or even longer dated debt when the interest rates were low. And now we're running into a position where we're going to have to, roll over our debt, and it's going to be at higher interest rates. So I definitely see the desire and need for it. It's just challenging with the other macro, environment that we're facing. But I do think, look, regardless of what people think of Elon Musk, I'm personally a fan of his, but whatever people think of him, this long overdue that somebody went into the different departments and really looked to see, we need a Pentagon audit. We need to be able to know what we're spending things on. And I'm not going to I have my personal views on how money is spent overseas, but we need at least a full accounting of it, and for the American people to understand what it is and to weigh in on it one way or the
Sunlight
other.
is not a bad thing, David. I'm with you.
Yeah. And I am a little, I will say this, it does disturb me a little bit that there's so much frenzy against sort of this sunlight concept. And it does make me feel a little curious that there's this push against us having more information about what we're spending on. And I think all of us, regardless of political affiliation, we should know what we're spending our money on, because we've all are paying taxes. We're working hard for it. And I think the American public should know what we're spending it on. And then, there can be a dialogue.
David, are you saying somewhere in there, I feel like you're saying we'll see 100-year U.S. Treasury bond being purchased by stablecoin providers as reserve? Am I incorrect?
I mean, if I was a stablecoin providers, I wouldn't be buying 100 years. But I mean, we have missed an opportunity in the past when interest rates are really low. Like, think about how the low interest rates for mortgages has totally affected parts of the housing market. There are people who may want to sell, but they're like, I'm not going to be able to finance this property or the next one, within 300 or 400 basis points. So it makes you think twice about selling. We missed that opportunity on the debt side, which would have been really favorable to us.
Yep. Understood.
That was a mouthful. I know. We could go on for hours about this.
For everyone in the audience, these are some of the topics that'll come up at that steak dinner. We're probably looking at a 5-hour steak dinner. So just David, Josh, let's plan appropriately. As we begin to wrap up, I've got a couple of important questions for both of you. David, my sources tell me the Miami Yacht Show is happening. Did you park the 65 meter there? Or are you in a market for an 80 meter? What's going on down in Miami?
Yes, it is going on this weekend, and I don't get into the details of those kind of things. I just like to be there and show up, and everything's sort of as it should be. But it's actually a beautiful weekend for it, and it's a nice tourist attraction for people. But no, I'm very content to keep my focus on crypto, and I think that will be the best performing asset class for this year.
Is that another forecast out of your crystal ball?
Well, Ron, I have a few ideas, but we'll do it maybe next week. We'll talk about some further ideas I have for the year.
We will, and we should also talk about one of the requests we've had. Josh David, we should is bringing back some guests. We'll queue up a calendar of guests to join us. There's so many important topics. Josh, where in the mansion do you store the dozens of roses you'll be receiving throughout the Valentine's Day holiday? How do you just manage that process?
Oh, I just throw them in the closet.
Oh.
Have a compost going in there.
She composts the roses. That's the spirit, Josh, of Valentine's.
Yeah. Save all that Godiva chocolate for us, Josh.
Not a chance. Not a chance. As I said, I'm eating myself into oblivion of chocolate. What about you, Ron?
Me?
When you're not looking at photos of steak in front of your wife,
when I'm not trying to hide my cell phone from my wife because David's dinner is on my cell phone in a very odd series of photos. It's going to be a quiet Valentine's Day, just the wife and I and a bottle of wine. Lots of planning work to do. We mentioned the Washington trip that's happening in March. Really looking forward to that. Really looking forward to seeing you both there with so many of our other members. Next week, for those of you who are focused on the accounting side of everything, we've got two brilliant minds doing a webinar on Wednesday at 2 p.m. publicly available. Jesselyn Dean of Legible, Nick Farr of Forbes Mazars will be talking about why are taxes for crypto so darn hard, including all of the new regulations, 1099 DA. So anyone with an accounting focus should be able to register for that. You see it on LinkedIn. If you've got any questions, drop us a note. info@wsba.co. The other thing I'm diving into, and I'm going right back to the work, David, Josh, I've been spending a lot of time with the on-chain analytic data. David, it's fascinating when you look at things like percentages of what particular cryptos are in the money. Like over 90% of crypto wallet holders are in the money, and some of them by a significant margin. So for me, that's what does that mean for the future of Bitcoin? Where do prices go? When so many people, David, have an incentive to say, I made a boatload of money. I might take some of that money. So I think that data is important. We should probably deep dive on some of that, David, in one of our webinars in the future. Yeah, there's a lot going on. Josh, go ahead.
I was just going to say also, if so many wallets are in the money, that really goes to the question of whether there's actual harm, right? When regulators look at things, right? Like, is there actual harm? Are people actually losing money? So I think that is a very good thing to know for a lot of different reasons. Of course, that doesn't mean that any one particular person didn't suffer some sort of harm, but overall, I mean, if it's generally rising boats, I think that's a very that's very helpful to know. Also, I saw, by the way, I don't know if this is it's reported in the Bitcoinist, and evidently it was first reported by Unchained Crypto yesterday, but there are swirling talks, by which I mean rumors. Okay. So don't take any stock in this. But that President Trump may determine to move away from the idea of a crypto council to having individual summits, right, about various topics. And part of the reason, according to alleged insiders, at least as it's been reported, have said that this reflects both strategic policy considerations and an attempt to diffuse growing internal tensions across the digital asset industry. This I'm reading from this Bitcoinist article by Jake Simmons. So I'm just curious if you guys have heard anything about this. I guess it's one of those things where we stay tuned.
I mean, I'd seen the article. I've certainly heard from colleagues in the space. Look, there's a lot of very strong personalities in this space, and I'm sure it's not easy to put together a council. From my own personal opinion, if a Josh Klayman and David Brill are not there, it's not a council worth having. But the administration's got a lot on its plate as well, right, Josh? Under the purview of some of the crypto czars, also AI so there's a lot going on. We'll see how it plays out. We look forward to be part of any summit as well. But David, I'm sure you've seen the same thing.
I have. And look, it is interesting because, you know, in some ways, unintentionally, you can pick some winners and losers on protocol based on who's included and who's not. And I don't think that's the intention. And, you know, look, this is a bigger problem we're going to have as an industry. Now that we have some clout, now that we have people who are willing to work with us, you know, where do we find common ground? And, you know, I think next week we can talk about Haggerty's stablecoin bill, which I think is finding that common ground. And I think really gets close to something that a lot of people can get behind. But we are going to have to find common ground. I think market structure is going to be an interesting place. And I think there's a, you know, some divide between centralized exchanges and decentralized exchanges. And where is the common ground that will benefit all and not harm some versus
and
others.
that common ground is even more critical, David, when we look at the trend of institutions looking to get more deeply involved with decentralized finance, because they see a future where that's going to need to be part of the portfolio.
I mean, look, crypto, as we've seen, has been driving changes in traditional finance, whether it's moving from T+3 to T+2, now to T+1. You know, the rapidity of moving value across the world. You know, I think Schwab is now going 24/7 and, you know, trading for some of their ETFs. And so we're really seeing us, you know, be the vanguard in changes in how trading is done. So it's a lot of positives, but we're going to have to do some of the sausage making now and find regulations that can work for us. And so far, I'm feeling pretty bullish about the new stablecoin bill that was proposed. So maybe that's a jumping
Agreed.
off.
David, Josh, really appreciate it. Always great insights. Thank you both for being part of it. For everyone in the audience, again, if you had additional questions for Josh or David or I, info@wsba.co. We will see you all. Have a great long weekend. The President's Day holiday is next week. We will see you all next week. Josh, David, thank you so much.
Thank you, guys.
Take care, everybody.